Wasabi wallet. Unfairly private.
Should you buy altcoins? If you're watching this video, you're probably looking at some headlines, seeing some major movement in the price of Bitcoin, and you may be looking at Bitcoin thinking, ooh, that's pretty expensive, but I'm still excited, so maybe I should buy some other altcoins, some alternative cryptocurrencies, because their prices are lower and I'll get more bang for my buck. Well, today we're going to look at the exact numbers had you done the same in the previous bull run back in 2017 and held on to today. I'm Ben with the BTC Sessions, and this is your daily session.
Hodl the Bitcoin.
Now, before we dive in, I want to give a shout out to sponsors of the show, LEDN.io. This is where you can use your Bitcoin for a variety of different services. They've, of course, got their Bitcoin-backed loans. This is where you can use your Bitcoin as collateral to get a Canadian or US dollar loan. So if you're in a pinch and you need dollars and you don't want to sell your Bitcoin because that is a taxable event and you're worried about having to buy back in at a higher price, this could be for you. They've also got Bitcoin and USDC savings accounts with interest rates of up to 11.7% annually paid monthly. And they've got their B2X offering, which instantly buys you more Bitcoin with the same loan mechanism before, effectively doubling your Bitcoin on the spot. So if you want to check these guys out, there's a link in the show notes down below. And if you click that link and opt to get either of their loan products, they will give you $25 for free directly into your savings account. Now, up next, we have the absolute legends over at Crypto Cloaks. These guys are absolutely killing it. They make the best Bitcoin swag with their 3D printers. I've got a case for my node. I've got the Bitcoin grenade. The Triton's on the way. They've got the Citadel flag, covers for your hardware wallet, sticker packs, coasters, just a little bit of everything for everyone. Again, can't say enough good things about them, and things are flying off the shelf. So be sure to head over to cryptocloaks.com, and if you want 5% off, use the code BTC Sessions, all one word, at checkout. Now, we also have the Kobo Vault. I love this thing. It is one of my regularly used hardware wallets, and I love it because it is 100% air-gapped, meaning you never plug it into an internet-connected device. Everything is done via QR code, and that means that the keys to your money are kept safe and offline. Now, they do have Bitcoin-only firmware, which I do recommend. They've got a secure element, open-source firmware, and they work with a lot of my favorite wallets, Bitcoin Core, Electrum, Wasabi on desktop, which is my go-to, and Blue Wallet on mobile, which is my go-to on my phone. So be sure to check them out. There's a link in the show notes down below, and yeah, these guys are great. And finally, if you're living on Bitcoin, or if you just want to treat yourself, head over to Bitrefill, because they just have an absolute plethora of gift cards. These guys are a godsend for me because, as I said, all of my income is Bitcoin. That's what I live on. And it helps me as a saver too. But sometimes you got to eat, you got to get gas, and sometimes you just want to do a little bit of shopping. So Bitrefill is awesome. And the other nice thing about it is, as you shop, you earn sats back. So you actually earn Bitcoin back as you purchase gift cards. So be sure to check them out. Again, link in the show notes. And with that, let's dive into the show. So as I said, this is all about diversifying your crypto portfolio. And I originally wrote an article about almost a year and a half ago now. It was a post-mortem on a segment from CNBC. And the segment on CNBC was called "Here's How to Build Your Cryptocurrency for Portfolio." And Brian Kelly discussed how to add to your portfolio and what he would like to see out of a well-diversified crypto portfolio. And so he broke it down and he gave allocations of 30% Bitcoin, 15% Ethereum, 15% Ethereum Classic, 10% Zcash, 10% Monero, 10% Ripple, 5% Metal, and 5% IOTA. Now, at the time, almost all of these were pretty, I don't want to say mainstream, but they were the upper ups of the cryptocurrency market. They were some of the top coins, with the exception of maybe metal. That one was a little bit more obscure, but the rest of them, top 10, top 15, probably, depending on the timing. And so this is what he recommended. And his idea was you got to get different types of technologies and spread your money out across all of them so that you're covered. And that will give you the best outcome for your portfolio. Well, in doing this post-mortem, we found that that wasn't the case. However, some people said that I was cherry picking dates because Bitcoin had a decent summer last year and alts were really having trouble keeping pace. And so people said, well, you're using the date today because Bitcoin's doing well. Well, guess what? I've waited another, as I said, about a year and a half, and I decided to take a look at that postmortem and update it a little bit and see what we get. Now, some of you may also say about the start date. Well, you're starting at a specific time in the midst of a bear run or a bull market. Yes, I am. And there's a reason why I think this start date is important, or particular here. This was partway through the 2017 bull run when most people come on board. The majority of mainstream individuals are going to be hopefully looking at this video going, I'm just getting into cryptocurrency. I don't know what to do. Should I buy altcoins? And they may be seeing segments like this, maybe even again on CNBC, maybe even again by Brian Kelly, talking about diversifying your crypto portfolio. Well, I think doing this in the midst of a bull run as a start point for measurement is a good measurement, is because most people, most retail investors will be coming in at that point, and this is what they can expect from taking this advice. Okay. With that said, let's take a look at the numbers. Oh, there's one other thing I wanted to touch on. If you're brand new to Bitcoin, you may also be looking at Bitcoin saying that looks expensive and you're suffering from a little bit of sticker shock. The dollar amount for a full Bitcoin can be daunting, but you do not have to own an entire Bitcoin. In fact, I would say that unit of measurement isn't super useful for the average person. I think you need to think in sats or satoshis. One Bitcoin contains 100 million Satoshis. If you have any Bitcoin, you have sats. It's like dollars and cents, but there's a lot more cents in a Bitcoin, okay? So 100 million Satoshis in one Bitcoin. We're gonna be referring to sats a whole bunch during this video. So start thinking in sats. It will do you favors in the long run. So let's break down those numbers. Now, I should reference that the numbers for pricing per coin I got from Coinmarketcap from a historical snapshot, which took place actually about 2 days after the segment from Brian Kelly, but the numbers more or less tell the same story. So I assumed that an individual would take $10,000, and I know not everybody will do that, but this is a nice round number to work from, $10,000 and split it up as we saw in that percentage of allocation that Brian Kelly floated on that program. And so first, we're going to take a look at the total in dollars, how you would have done for each coin. So $10,000 split up, you would have first Bitcoin, $3,000, 30%. The price for one Bitcoin then was $4,087. You would have been able to pick up 0.73 Bitcoin. The price today, as of recording this video for Bitcoin, is $18,267. The current value of your $3,000 is now $13,407 for a total gain of $10,407 from your Bitcoin. Now, Ethereum, you would have put 15% or $1,500 in. The price for Ethereum back then was $301.43. You would have picked up just shy of 5 Ethereum. The price for Ethereum today is $592.14. The current value of your previous $1,500 is now $2,946, and you had a net gain of $1,446, so not bad. Now, what about Ethereum Classic? Again, 15%, $1,500. The price for Ethereum Classic back then was $13.89. You would have picked up just shy of 108 of them. Those are each worth now $6.19, so a big hit. Current value of your $1,500 is down to $668, and you had a net loss of $831 on that trade. Now, Zcash, you would have put 10% or $1,000 in there. The price per coin was $241.07 at the time. You would have picked up 4.15 at the time. The price today is now $70.56. The current value of your $1,000 is now $292, and you had a net loss of $707. For Monero, also 10%, you would have put in $1,000. The price back then was $54.71. The price today is $124.36. So you would have gotten about 18 Monero. So your $1,000 is now worth $2,273. You had a net gain of $1,273. Your XRP or Ripple, you would have put in 10% or $1,000. They were 16 cents at the time. You would have gotten 6,250 of them. They are now 53 cents. Your current value of your $1,000 is now $3,312. You would have had a net gain of $2,312.50. Now, metal, you would have put in 5% or $500. The price of metal at the time was $9.36. You would have picked up 53 and a half of those. The price of metal today is 32 cents. Your $500 is now $17. You lost $482 on that, almost all of it. IOTA, you would have put 5%, $500. The price of IOTA at the time was 94 cents. You would have gotten 531 of those. The price of IOTA today is 34 cents. Your $500 is now worth 180, and you lost a total of $319 on that one. So total, you put in 10 grand, your current value of that portfolio is $23,098. So pretty damn good. You had a net gain of $13,098. Cool. All right. So overall, looking at it, not bad. However, I'm sure some of you noticed that most of that $13,000 gain came from Bitcoin. Yes, you gained a few grand on a few of those other coins, but most of them, 4 out of 7 altcoins were in the red. Okay, fair enough. Now, let's go into the opportunity cost. And opportunity cost means if you had done something else, could you have done better? And so let's take a look at how many sats, how many Satoshis you could have gotten, how much Bitcoin you could have stacked with this same amount. Okay, so obviously with Bitcoin across the board, you would have gotten 0.73 Bitcoin, which is around 73 million sats. And you would obviously still have the same number of sats, 73 million sats. Now with Ethereum, you could have gotten almost 36.7 million sats. But now your Ethereum is only worth 16.1 million sats. So you lost 20.5 million Satoshis holding Ethereum. Ethereum Classic, you could have bought again 36.7 million. It's now only worth 3.6 million sats. You lost 33 million sats with that trade. Zcash, you could have bought 24.4 million. It's now only worth 1.6 million. You lost 22.8 million sats. Monero, you could have got 24 million. It's now worth 12 million. You lost 12 million sats. XRP, you could have got 24 million. It's now worth 18 million. You lost 6 million sats. Metal, you could have gotten 12 million sats. It's now worth 93,000 sats. You lost 12 million sats. IOTA, you could have bought 12 million sats. It's now worth 990,000. You lost 11 million sats. All told, you lost 118 million Satoshis. So let's see what would have happened had you bought Bitcoin only. $10,000 into Bitcoin at the time at a price of $4,087. You would have gotten 2.44 Bitcoin. With the price today, your Bitcoin would now be worth $44,689 from 10K. Your net gain would be $34,689. The opportunity cost of holding these altcoins was you lost out on $21,591. But again, the more important stat here is you actually lost out on 118 million sats. That's what matters here. You could have had 244 million sats. Now instead, you're sitting on 126 million sats if you swap out of them. And there's still another factor to consider there, but we'll get to that in a moment. So some of you may be looking at this and saying like, hey, you know, this time is different. These coins were crap back then. Most of them didn't have staying power. And now the market is more mature and the coins are more likely to have staying power. Okay. This is today at the time of recording this video. Again, prices are kind of moving back and forth here, but we get a general idea. We see Bitcoin is there. Ethereum's in the number 2 spot. We see XRP, Tether, but then we're starting to see some names that were not included in that portfolio that we saw there. We see Chainlink, we see Bitcoin Cash, we see Polkadot and Cardano and Binance Coin and Bitcoin SV and EOS and Stellar and Wrap Bitcoin and Monero's down there. Okay. So we're seeing some different names and some familiar names. Okay. Let's hop back. Let's hop back to 2017. In and around that time, the same historical screen grab that I used to get prices for that portfolio. And it'll tell a different story. So again, we have Bitcoin number 1, Ethereum in number 2. We have Bitcoin Cash. Now, if I recall from just looking, Bitcoin Cash was much further down the list then. We have XRP sitting there, is still up high. IOTA is one of the ones that Brian Kelly was talking about. Now it's not even in those top 15. NEM, you wouldn't recognize that today. Litecoin is still up there. Dash, that's totally fallen off. Neo is nowhere to be seen. Ethereum Classic, still, they were up in the top 10. Did we even see them in the top 15? No, we didn't. Okay. Yeah, OMG, that wasn't in there. Monero has dropped since then. BitConnect, by the way, BitConnect was a legitimate Ponzi scheme. A Ponzi scheme was in the top cryptocurrencies, and it went higher than this. It was in the top 10 for a while. Yes. Qtum, Stratus, Waves, again, it's a mixed bag of some familiar names and then a bunch of stuff that you've probably never heard of at this point. Let's jump back one more epoch, one more bull run back to 2013 mid-year. And this one is hilarious. Okay, you see Bitcoin, you see Litecoin, you see XRP. Those are familiar. Okay, fair enough. Ethereum didn't exist yet. Look at the rest. Namecoin, Peercoin, Feathercoin, Novacoin, Primecoin, TerraCoin, Infinite Coin, Goldcoin, do you know any of these? Unless you've been around since then, I doubt you've ever heard of a single one of these. So what am I getting at here is that I posit that you will continue to see this revolving door of flavor of the week altcoins that purport to be better in some way. They've improved on some aspect. The thing is, they inevitably get replaced by something else that says, oh, we did this better, all the while losing value versus Bitcoin. And there's no better example of that for those of you thinking, well, but again, still, there's going to be ones that have staying power. We saw Litecoin and XRP, and we saw Ethereum. Once it started up, it's still around and it's still number 2. Yes, they can be around, but they are losing value versus Bitcoin in the long term. And again, the perfect example of this is Litecoin. It's been around forever. Everybody says it's silver to Bitcoin's gold. And this is the performance of Litecoin versus Bitcoin, aka how many sats could you get with your Litecoin? And yes, it's got peaks, but it also has troughs, and the general slant of the entire existence of Litecoin is down and to the right, meaning it is losing value versus Bitcoin. And I believe that this will be the case with every single altcoin over time. Now, you can argue with that. Nobody has a crystal ball into the future, but I think that value will flow to Bitcoin. And unless you're super early on something, you're able to get in before anybody else does, which, I mean, if you're watching this in the midst of a bull run, you're probably resorting to mainstream news and videos like this to tell you what to buy. And at that point, you're not getting in early on anything. So that's kind of what I believe. Now, you may also be thinking, well, look at all those spikes. I could buy low and I could sell high and I could get more Bitcoin. One, do you really think you're that good of a trader? But two, you have to consider capital gains tax. This applies, and it depends on your jurisdiction, but capital gains tax means that any profit that you make in dollar terms off of an asset that you trade, even when you're trading from crypto to crypto. So if you bought some altcoin and then traded into Bitcoin, whatever the gain dollar-wise was on from you bought that coin till when you traded it to the next one, that gain now has capital gains tax. So that means if you made a couple $1,000s on that coin and then you trade it to something else, that $2,000 that you technically made is now a capital gain. You have to take half of that and apply it to your income, and that gets taxed at a regular income tax rate. So if you made $2,000, take half of it, $1,000, add that to your total income for the year, and that now gets a tax of whatever income tax bracket you are in. So not only do you have to outtrade Bitcoin and time it incredibly well, without knowing necessarily where things are going to go, you also have to trade better than Bitcoin trades, and you have to trade better to cover your capital gains taxes that you incur through doing those trades. So again, ask yourself, are you that good of a trader? Now, some of you may be asking, well, you started at a price point for Bitcoin of $4,000. It was one-fifth of its all-time high at that point. So isn't that a little unfair? What if somebody started buying into Bitcoin at the all-time high and they surely would have lost money, right? Not so. So I ran the numbers, and had you started dollar cost averaging into Bitcoin at the all-time high, the week of the all-time high, and you just put in $10 a week, every week, until now, until the time of recording this video, and Bitcoin is getting close to its all-time high, previous all-time high. It's a bit over $1,000 off its previous all-time high. So I'll just read the tweet that I put out here. If you started to dollar cost average, which means the same amount of dollars every interval of your choice, so every week you put $10 weekly at the all-time high, you would currently have well over 21 million sats, which I think is the important number. But from $1,530 or $1,530 spent, your equivalent purchasing power would now be nearing $4,000. So if you're looking to take emotion out of it and you find Bitcoin to be valuable and you think it will be valuable in the future, then dollar cost averaging may favor you because you don't have to think, you don't have to be moving money around constantly. You can just sit back and be relaxed about it and just let Bitcoin do its thing. But again, up to you. Now, lastly, some of you may be thinking, well, what the hell sets Bitcoin apart? Why is it doing so well in the face of all these altcoins? After all of these altcoins tend to be newer and they have better technology and they're faster and cheaper and so on and so forth. Now, there's a lot of points to address there. They are beyond the scope of this video, but I will be making a video about that. If you're curious in the meantime, I wrote a piece back in 2019 called My Path to Bitcoin Maximalism. It outlines exactly why I think Bitcoin is important, how I think it is able to achieve that, and where every single coin to date that I have seen does not check all of those boxes. So if you want to read that, go ahead. Also check out Bitcoin Audible, because Guy Swan, excellent content creator in the space, he actually did a read of this. So he just read it, and you can do it audio only if you prefer, or you can take a look for that video when it drops. I'll link it when it is available. Now, some other information. I've put together a list I put together a list on Amazon, and this list is Bitcoin books that I think could be good for you. Best bet is if you want to pick up some books, start at the top, go one at a time, work your way down until you feel you are well informed enough to make a decision. But these books will help outline, again, the reasons why Bitcoin is important and where other things may fall short. And the last thing I wanted to touch on here, and I guess kind of the general theme of this video is summed up with this tweet from Conrad here. It says, measure your wealth in Bitcoin, not limitless paper money that is designed to lose value over time. And then his retweet that he added in there was, the denominator is literally just paper with holograms printed on it. They make new ones whenever they want and put a famous face on it for fun. Infinite fucking supply. So what I'm getting at with showing you this is, perhaps it's not great to value your wealth in a currency that is constantly devalued over time. So if you're measuring in dollars, you might look at that portfolio and you might be looking and saying, hey man, I'm up 13 grand. That's pretty good. But you're missing the fact that you're down 118 million sats. And to me, that does not outweigh the dollar gain. Anyways, guys, I'm going to wrap it up there. I hope you found this video useful. I hope that this video can be referred to throughout what I think will be the bull run of 2021. And if you find it useful, please do hit the thumbs up button because that'll get it in front of more eyeballs. Like, subscribe, and share. Share it around with anybody who might find it useful, who might be considering buying a bag full of altcoins. If you want to help out the show in another way, you can hit up the sponsors I mentioned down below. That was LEDN, Crypto Cloaks, Kobo, and Bitrefill. And if you really loved what you saw, you can always drop me a Bitcoin Lightning Network tip at my tippin.me page. That is tippin.me/@BTC Sessions. With that, I'm out. Have yourselves a wonderful day, a wonderful evening, wherever you may be, and I'll see you next time for your daily session.
Hodl the Bitcoin.